Hey folks, welcome back to another episode of Mad Money. Today we're going to be talking about 14 or 15 different companies that paid me in the month of February. Now, of course, also there is some bank income from there from interest payments. There's also some Shopify income and YouTube income. So we'll talk about all of it today if you just stick around after this introduction. All right, guys, so welcome back. So I think a lot of you guys are familiar with the fact that the market has been rather volatile over the past 9 or so trading days. The max the portfolio ever got up to before all this volatility started kicking in was about $418,000. Now, that being said, we're down 31-ish thousand dollars as of now. That being said, there was a point, I believe last Friday, where it got down about $36,000 from all-time highs for my particular part of the portfolio. And what that means is you're basically seeing dividend yields in the portfolio jump up a little bit. Yield on cost is staying relatively the same though, if not coming down slightly, just based off the fact that I've been investing a good chunk of change. But also, I've been deploying some capital into the portfolio, which I might talk a little bit about in this video. But mostly what we're going to be talking about is the companies that paid me in February. So I believe in total we made about $1,250 in terms of overall income that's not considered my W-2 income. So a portion of that, of course, is dividend income. A portion of that is from Shopify. A portion of that is from YouTube. So thank you guys always for watching and subscribing to the channel and making sure to hit the like button for the YouTube algorithm, as Graham Stephan would say. But that being said, 14 companies paid me. Already kind of mentioned that. Have been trying to avoid over allocating into energy stocks, but of course, I took advantage of the fact that a lot of energy stocks have been rather cheaply priced over the past couple of weeks, just based off the fact of the recent ongoings in the market here. But that has crept up the energy holdings just a little bit. At one point, I was down almost on par with respect to portfolio value to financials, but with some recent investments, taking money out of my savings, so my cash is down slightly, and putting that into energy, it's kind of back up. So I think I put overall about $7,000 back into energy stocks. I won't talk about what ones, maybe I'll make a different video about that. But what I really want to concentrate on is the companies that paid me in the month of February timeframe. So we'll go to my forecast here, where luckily for me, I was able to set it up to show the companies that really have paid me in the month of February. Now, let me just get this locked up for you guys so we can follow along rather simply. All right, so now that we're locked up here, we can actually look at the companies that paid me in 2020, and what I'll try to do is zoom in for you guys so you can see monthly totals. No surprise, about $830, which is a little bit over what we made in January of 2020. January was actually down year over year, just based off the fact that we had a special dividend payment. But that being said, we're up to $831, and that also being said, the second month of every quarter is generally speaking the second lowest payment month. So the fact that we're seeing the minimum months and the middle months getting into the $700, $800 range only means positive things for when you go into the third month of the quarter, which you can kind of see the forecast here is anywhere between $1,400 to $1,600, depending on what quarter we're looking at, whether it's first quarter, second quarter. First and third quarter are stronger just because I have some semi-annual dividend pairs coming in the first and third quarter. But that being said, I mean, we're just continually seeing the average of these monthly stock payments go up, and we have a little bit of a graph that I have on the next slide, which we'll talk about that a little bit. So hopefully by this point I'm zooming in for you guys to be able to see maybe 4 or 5 different positions as we kind of go through. But what I'll do is go through the entire portfolio and highlight in red in the 20th column here, or the 20th row rather, which ones paid me. So At the moment, I believe most of these were reinvested, but for those of you guys that follow whether or not I reinvest my dividends or don't reinvest my dividends, I've actually turned it off for the time being, just based off the fact that specifically, maybe I'll touch a little bit more a little bit later in the video, that I'm making around $8,000 a year in my individual brokerage account. So that being said, with additional capital contributions that I'm making to the portfolio in the individual brokerage account of around $1,500 to $2,000 a month, that means basically on a given month, I'll be basically having around $2,000 to $2,500 a month to add of capital into the portfolio every month. So it doesn't necessarily make sense for me to be automatically blanketing all the dividends that I receive back into every single company. It makes more sense for me to start to pool those dividends and selectively invest into something that might be currently out of favor, when you might be looking at the market. Some stocks, kind of go up in swings, where they're kind of in their highs and lows, and they kind of do peaks and troughs. And I don't necessarily want to be automatically reinvesting in companies when they're kind of at their peaks. I'd rather wait for, let's say, a Caterpillar to kind of pull back 5-6% off of its all-time highs to be, let's say, hitting that 5-6% dip when it kind of goes back up and it reaches hopefully back to another all-time high. It allows me just to capture a little bit more and also get dividends a little bit cheaper, if I were to able to time it correctly. Now, of course, this is a strategy, so it might not necessarily follow through with it in the long term. But anyway, just to give you guys an update on that, let's actually get into the companies that paid me. So we had $121 from ABBV. That's just over 100 shares or so from ABBV. We had BPMP Partners, which is a BP midstream partner company. I have about 500 shares of that. I believe this is relatively well priced at the moment. I think it's like a 10 to 11% dividend yield if you're into that. Definitely at the moment paid for by its distributable cash flow, so I guarantee if you check that out, you'll be somewhat interested. Caterpillar paid me 39 bucks. I think that's my first dividend payment from Caterpillar. Maybe it's the second, but I'm pretty sure it might be my first. We have Cheniere Energy Partners, which paid me about $80 or so. Now zooming over a little bit here so we can keep up with the video. Kinder Morgan paid me just under $30. Main Street Capital paid me my monthly dividend of just under $30 as well. Then we had Realty Income Corp, which may be about $10 or so. That's been consistently reinvested, and so you can see, generally speaking, it allows me to increase my monthly dividend by about 20 cents or so. But it is what it is. Stag Industrial just under $15, or just over $15 as well. We had AT&T just over $115, which purchased me a good amount of shares there. We had Verizon, which allowed me to just purchase just over a share, just by reinvesting that. We had some interest income from having money in the individual brokerage account, or in the YouTube Moolah account rather, for that one. We had some more Main Street Capital in my individual retirement account, so that's a $30 payment or so. So it's about $4 more a month than what's in my individual brokerage account. We have some more Verizon, for just over 20 bucks, so a little bit smaller of a position in my individual retirement account there. Then we also had a little bit of Kinder Morgan. This is in my Robinhood account actually, and so this is only one share, so I don't know if I'm going to increase it or not going forward. I might actually sell it and consolidate it and concentrate a little bit more on Southern Company, but that's a different story for a different day. Then we also have Realty Income Corp in here as well. This is in my computer shares account, and part of me as I kind of zoom out so that we can continue to see what we're investing in. I can't scroll over too much more in here, so hopefully you can bear with me. We had a payment from Clorox, another payment from AbbVie, which is in a different account. General Mills paid me about $1. It's a very small position. Have a small position in Procter & Gamble. And then we also have some Cardone Capital and Personal Savings. Cardone Capital is continuing to pay me about $56 a month, so that doesn't change month over month yet. I'm hoping that in the future it does as the fund matures a little bit. And then we're sitting on a decent amount of cash, I believe 18,000 or so on average for the month of February, so that meant a $20 interest payment. That will go down slightly as I have invested some of this capital into energy stocks. months. Now, that being said, if you kind of compare that all the way back here, um, to the monthly total, it's looking at about $831 or so in terms of what we've made in February dividend income and interest income. That being said, reinvesting some of those dividends as well as investing some capital into the portfolio. Next year, at the moment, we're looking at about $892. Now, keep in mind, we have about 9 quarters left to go before we start hitting the ex-dividend date for some of these. So I anticipate that, fingers crossed, we'll be able to get that over the $1,100 mark by next year. Generally speaking, we're able to increase year over year pretty substantially. And if we kind of wanted to go into that actual analysis, we have it built in here where month over month from 2019 to 2020, for example, we increased the dividend payments by 100%. So looks like here we had just under $416 or just over $416 in 2019, and in 2020 we're at $831. So that being said, it's a just under 100% return, and just based off of what we've reinvested and had additional capital added to the portfolio just now, without adding any additional capital throughout the next 9 months to 12 months, we're already up 7.3% expected for 2021. Now, that could also go down, but I'm cautiously optimistic that continuing to add capital to the portfolio will have at least a 7.3% growth. We haven't really had any dividend raises yet this year, so that's also a contribution factor that might help. So yeah, and you can see, obviously, since we haven't really gotten paid in the rest of the year yet, all of the remaining in 2021 kind of stays at zero. But you can see we have a pretty comfortable increase so far, and we haven't even gotten through the majority of 2020. But you can see the further we go down in the years, the closest we were. So obviously we were just in December 2019. So year over year growth for December isn't that much. And I mean, keep in mind what it looks like for October. It wasn't that long ago. Depending on what I invested in, it might not have grown all that much at all, depending on dividend raises, depending on dividend reinvestment. And so you could actually see here in January we went down slightly because we had a special dividend payment here January 2019. So we actually went down slightly comparatively year over year. I think we had like $100 or $200 special dividend that came from BHP last year. So that continues to show up to the portfolio, and unfortunately we show our first negative for the year. And maybe because of what I sold one position here. It actually might be continuing to be negative in next year for January, but like I mentioned, for February, which is the month we're kind of analyzing right now, it goes up about 7%. One cool thing that I wanted to share is the forecast that we kind of have for the dividends that I've had ever since I've created the portfolio. And so you can see it really all started off at zero back in the 2013-2014 timeframe. I might have had one or two small dividend payments in 2012, but you can see it really is steadily kind of gone up. You can always see that every single quarter I have a good month, I have a medium month, and I have a high month. So you can kind of continue to see the waves as we continue to go up. And it flatlines, obviously, because there's no forecasting or upward growth built into the portfolio, just dividend reinvestment. I basically just look at what I have invested now is what I'll be having for the next 12 months. So that's why it kind of flatlines here. But you can see it steadily is increasing over year. If you wanted to say it goes exponential, you could. I could kind of see that as well, but it also could just be the fact that I'm adding additional capital. So the capital contributions to the portfolio haven't been consistent over this time period. As my income grows, I try to keep the same percentage that I'm keeping and saving every single year. So I know when I first started, I was saving around 20%, then I believe it got to 30%. Now, luckily for me, I've been able to save around 40 to 50% just based off of my current lifestyle, my current situation with work. And so that's how that kind of ends up. So you can see we're really starting to hover around the $1,000 mark every single month, which is pretty cool. And can't really complain with that. We're getting some peaks now over $1,500 a month. I'll be excited to get my first $1,500 a month in terms of just dividend income a little bit later this year. I think it's actually next month. So that should be cool to analyze and see what that kind of comes in as. And I mean, month over month, that's almost 100% increase. going from 830 to 1590. I mean, it's probably like a 90% increase month over month. So, pretty cool to see one of the peaks, and we'll see how that actually ends up coming through the portfolio. Looking at how it also increases in terms of the total income for the month. So Shopify income came. Kyle paid me out from some of the stuff that we've been doing with Shopify, about $200 or so. After paying PayPal a little bit, it ends up being about $190 or so. YouTube just for the month, and I've been slacking with respect to creating videos, down to $210 US a month for the month of February here. So combining that with the dividend income, uh, this total gets you to about $400 or so if you were to add the Shopify income and YouTube income. Add that on top of the $833 from dividend income, looking at about $1,233, which isn't bad. I can't complain with that. It's down a little bit from January, and a lot of that has to do with the fact that we sold a decent amount in terms of Shopify from leftovers kind of coming over from the holidays, as well as the fact that I made about almost twice as much in January just based off of excess CPM that we have from YouTube, and me just creating a lot of content, kind of getting myself set up in the December timeframe for all of January releases. So I was able to have about a week or two off, maybe almost 2.5 weeks off. And during that time, I made a lot of content that I kind of just released over the course of January. And that being said, since I've kind of come back to work, I haven't been able to, or I've been lazy, and I haven't really been on my game with respect to making content. So that is a reason why we have about a $350 drop month over month. But that being said, I can hope to continue to increase the YouTube and Shopify income, as well as the normal dividend income as we continue to get portfolio income coming through. As well as W-2 income coming through. That being said, we still have about 14,000 or almost 5.5% in terms of the portfolio size in cash. And that also being said, I do get a nice influx of cash this month that I can deploy based off of a bonus that I should be getting. And so that in combination with some things, hoping to really get that starting to grow. Another thing, which I don't know if I really started yet, I did not, so I'll erase that point. But another thing that I really wanted to start breaking out, because now that I'm starting to get income streams from multiple different things, you could claim some of my real estate investment trusts are real estate, as well as some of my investments in, say, Cardone Capital and Fundrise are really real estate investments, and not necessarily stock investments. So what you could start to look at is having multiple different pillars of where my income is coming from. So instead of income by account or value by account, you could really start to look at it as value by real estate, or value by stocks, or value by Shopify income, or value by social media income. And you can really start to evaluate the businesses and the things that I'm doing on that sort of type of evaluation. And I'm curious if you guys are interested in seeing that as well. If you do, make sure to write a comment in the comment section down below. I'd be curious to see how many people actually care about that. That's something I can easily continue to build out. I know some of my other trackers, generally speaking, had a much bigger percentage of how things actually were broken down, and you can see it's kind of broken down a little bit here as well. So I'm still not 100% done with that yet in terms of breaking that portion of the portfolio down to that sort of granularity yet. It's something that continues to be built after I think about it a little bit more and try visualizing it here and there. And so that's the way it is. For those of you that are still on at this point and curious what my path is going forward, I'm not going to stop buying. I'm a long-term holder and a long-term investor. And so that being said, my time horizon is the next 20 to 30 years. And even though I might have the capability to retire, let's say in the next 5, 6 years, I'm going to continue to invest if I'm able to over the next 20, 30 years. So 1 or 2 years of downtime, or 1 or 2 years of the market dipping by 40, 50% was actually going to be positive for me, because I'll be buying companies at a rather cheap discount. That being said, one of the quickest ways that I can show you what my plan is 2008 time frame or even the 2000 time frame. You had these big peaks on the market, and by the time you actually hit the bottoms, you were down 40 to 60% depending on what market you were looking at. And dividend income, while it did take a dip during 2000 and 2008 recessions, 2000 and 2008 recessions, it didn't dip nearly to the extent that the value of the portfolios did. So it might have dipped maybe by 10 to 25%, but nothing more than that. And it actually recovered a lot quicker than the value of the portfolios did. So the hope is that I'm able to kind of catch that arbitrage between what the value of the portfolio is going down with some of the income. Now, of course, some of the companies that I invest in, if they cut the dividend or they end up being in a bad financial situation, I might sell out of those to purchase into other higher quality companies that make sure that they have decent moats and debt structures in place that I don't necessarily have to worry about them cutting the dividend. And hopefully recessions kind of bring that stuff to light. You saw that in 2008 with Wells Fargo. Turned out to be an extremely good investment over the past several years. Um, Raising the dividend very consistently, very low debt to income sort of ratios there. Granted, they do have a lot of debt on their balance sheet just because they're a bank, but they're not overloaded and over leveraged like some of the other banks. They're a little bit more conventional with respect to what they do, with respect to some practices, but of course they've gotten themselves into hot water rather recently. So don't want to go too much into that, but that's kind of my philosophy for the next, let's say, 12 months or so as we start to hopefully continue to see some more volatility. My income at the moment is rather stable, my W-2 income. So that being said, I hope to continue to add that to the portfolio during these times of uncertainty and volatility to continue to grab myself and hopefully get myself over the, let's say, $14,000 a year mark, which is the goal for 2020. So another cool thing, hit over $1,000 a month if you guys are kind of looking. Forgot to mention that at the very beginning of the video. I think this is the first video where I've actually highlighted it. I've said it a couple times on social media um, and in a stream, but it is what it is. So really cool to actually hit that point, kind of nostalgic, but at the same time, a lot further to go, and it's just a milestone in a long-term investing career that I hope to build. So thanks for sticking around and listening to me rant for the past 2 5 10 minutes. I don't know how long it's been, but it's good to be back, good to make a video for you guys, and I'll catch you on the next one. Cheers.